And while Europe debates low rates, Japan has had low rates for a much longer period of time, but the economy has also struggled for most of the past decade. But now things are starting to change for the better. But the question is, can Japan sustain it? For more on this, I'm joined by Tran, First Deputy Managing Director of the Institute of International Finance. Welcome to Biz Asia America and welcome to the set. Let me start by asking you, what is Japan's monetary policy? Because it's shifted a bit here and there over the past year.
Since November, when Prime Minister Abe announced his intention to run, he announced also his intention to push monetary policy in Japan to be much more expansionary and more decisive. And with the nomination of Mr. Kuroda to be the new governor, it is expected that the open-ended asset purchase program will be implemented when he is confirmed. The idea is to buy assets to pump liquidity into the system with such a decisiveness that it can jolt Japan out of the 15-year deflation.
Now, you say 15 years, but it's also been 15 years of deflation plus relatively slower growth compared to the rest of Asia.
Right.
And looking at what's happened in the last 3 to 6 months, it appears, and I say that carefully, it appears that Japan's growth cycle has slowly changed a bit here. Part of that might be because of the currency, but I guess the question is, do you think Japan is in a new growth cycle? Has it started or has it not started yet?
Difficult to say. What we have seen since November is a very significant uplifting of the financial conditions in Japan, with the stock exchange up by 35%, with the trade-weighted index of the yen down by 13%, with bond yields down by 13 basis points. So that will make it easier and more inducive for Japanese companies to invest, for households to consume, and for export to revive a little bit. And we see that reflecting in the numbers. However, whether or not it is the start of the new growth phase remains to be seen, because basically we are confronted with key fundamentals, which is declining labor force in Japan, which is shrinking by 0.5 percentage point per year in the past 10 years or so, and declining productivity trend. At the latest measurement, 0.5%. Unless Japan can adopt structural reform to improve either growth in labor force or revival of productivity growth, it's difficult to see how the trend growth rate can be increased.
There are a lot of skeptics out there who watch Japan very closely, and they say, well, every single year there are new measures to stimulate the economy. I mean, this has been an argument for at least 15 years. What makes this year in particular different, or is it different?
Well, what is different so far is a determination by the government to coordinate fiscal policy with the 23 trillion yen fiscal package, which is quite unprecedented in terms of size, and very determination to expand monetary policy. So hopefully the combination of both will kickstart growth, at least for this year. However, to be sustainable long-term increase in trend growth rate, I think that structural reform is still very much needed.
Let's talk about something that's actually controversial, the yen. I didn't think it'd be controversial, but it is. At the G20 meeting in Moscow, that was the big elephant in the room that everyone didn't want to talk about. Then they did want to talk about it. And the issue is Japan manipulating the currency to its own benefit to provide support for their export-driven economy? And you don't necessarily have to answer that, but I guess what's the future for the yen at the stage that it's at now? Because that has given the economy a boost, especially for the exporters.
Well, basically, we have to distinguish two things. One is that in many mature market economies, Japan is clear, but also the Eurozone is another example where growth is very poor. It is important for the authorities to do what they can, fiscal policy-wise, monetary policy-wise, using domestic instruments to support growth. If they do that and stay with that, I think that is fine, and that is actually welcome, because growth in Japan is beneficial to the global economy. However, as the G7 and G20 communique made clear, countries should not explicitly target exchange rates. Government officials should not give guidance to market participants as to how they want their exchange rate to move, because doing so would be entering into the backyard by neighbor competitive devaluation policy, which is not good.
It is a touchy subject.
Right, but if they stick to their domestic objective, using domestic instrument aiming to revive growth in their economy, and let the exchange rate be determined by market forces, including investor assessment of how effective the policies are, that should be all right.
All right. Thank you very much for your analysis, Tran at the International Institute of Finance. Thank you very much.
Thank you very much for having me.